Well, g'day there, everybody. Thanks a lot for joining me on this Wednesday afternoon market recap. What a tremendous session we have seen. A very dramatic reaction and change to what, of course, took place on Tuesday. The Dow Jones Industrial Average up 320 points. This is what we call a one white soldier candlestick reversal pattern. Yesterday, we described, of course, the location that we were selling off into, this being a very logical area of support. We started to see, of course, that long lower wick develop during Tuesday's session, and really the majority of the losses, the very short-term losses that were priced into the market yesterday, have more or less been made back. The Dow Jones Industrial Average up 320 points. That equates to about a 1.2% gain. This candlestick pattern in and of itself at this logical area of support, I believe, has trapped the bears short. We spoke about this on Tuesday. Again, I referenced this very same sort of sentiment, very quick shift in sentiment as to what I thought was going to take place yesterday. And that is exactly what we saw transpire during today's session. If I change to the S&P 500, you can see for yourself the S&P up 34 points. Again, a very quick, a very sudden sort of reversal, trapping a lot of the bears who wanted to go short the market below the crack of this very short-term support area off from this logical support at 2,670. Not only have we made back the losses yesterday, but we've also added a couple additional points there as well, taking us back to the Friday close last week. So some very tremendous movements. I'm very happy for those who stayed out of the market short. Again, this was that of a bull trap to the downside, or so it appears to be as at the close on Wednesday. And you should be sitting there with a smile on your face at the moment anyway, thinking about the market reaction, the market movements, because we have once again more or less hit this nail on the head, so to speak. You can see on the S&P 500 also that we have closed this very short-term gap, or this open window. It has been shut between Friday and Tuesday session, so that is a bonus as well. And we're also starting to reclaim some of these exponential moving averages. It was looking as though, just on face value yesterday, we were going to see the crack of these exponential moving averages. But like we've been speaking about, generally after that of a correctional type of movement. When I reference correctional type of movements, I'm talking about the movement really since February through to the end of April, and talking about this somewhat symmetrical or at least descending type of triangle. Generally what you see after the breakout and the back test of the pivot is the exponentials holding as we move into the infancy of a grind higher. And that is exactly what I'm expecting to sort of play out as we continue into the month of June. My targets on these markets, again, still hold up at their more or less all-time highs. You've got the S&P 500 just coming in here at 2,852. I think there's a very good chance, by the way, that either towards the end of this week, maybe perhaps on Friday, if not the early stages of really the first trading session or the first week of trading in the month of June, that we are going to come on back and close above these highs at 2,746 on the S&P 500. Again, on the Dow Jones, I'm still looking at targets up here as high as 26,435. And there's a very good chance, once again, that we overshoot the highs in the month of May, or at least as we rotate into the month of June very, very soon, as long, of course, as this support area holds, and as at the close on Friday, it appears that way. So again, overwhelmingly happy at this point. I congratulate you, first of all, for not going short and not buying into the temptation of the naysayers up and around this potential sort of resistance area. A lot of those people right now are underwater on those shorts, and it looks as though this market has once again just priced in that next sort of continuation of those higher lows. This is now, of course, the third since the early stage of April, if not the late stage of March over here. And it looks as though we do have that of a defined bullish movement under construction. You can see these are the three stair steps, the three higher lows. And again, the bulls are winning out as at the close on Wednesday, and really has been the case since the lows established in February, March, and April as well. Now, also one further market that I wanted to bring to your attention, that is the Russell. I'm going to recap yesterday's session. You can see that we have this long lower wick. So as the markets were selling off, the Russell, so to speak, kicked the trend. We did close down 3 points yesterday, this of course being Tuesday, but we are still holding this pivot, this very important pivot here, just above 1,600. Yes, we can come on down more or less below that, but at the moment, if we start breaking above 1,641, this is going to be another signal of breadth, strength, and it's also going to add additional support to our narrative or our analysis, our forecasts on the S&P, the Dow Jones Industrial Average also. So I just wanted to throw that in there too. If I bring up the CCI and the ADX, the Commodity Channel Index and the ADX, you can see we're printing at 127, so this trend is still intact, and the ADX has reset off from this tweezer top, and this is more so following that of the 1, 2, 3 breakout continuation pattern that sets up really genuinely a lot. I mean, it is a repetitive pattern. You see it repeat a lot. And this is looking as though this is going to do exactly the same thing. We are also holding above all of the exponential moving averages. You can see that we're starting to see a reaction off from that rising 10 exponential moving average as well. And we still haven't even hit or tagged or tested the 20 or the 50 exponential moving average as well. So we're just seeing strength, a little bit of chop, but just be mindful of what the chop actually means. You need to understand, of course, the larger picture. And that's what I'm doing here as I break down the market analysis, or at least go through the market analysis through the eyes of a swing trader. Very important, this is swing trading. We're holding on to positions and also market positions for a number of weeks, if not up until around 2 months' time. Generally, that is the general duration of these trades that we are holding. And of course, you have to allow for some of these movements. We've spoken about them before they've occurred. And now, of course, we're starting to see the continuation of the larger sort of wave of the movement itself. If you're fortunate enough to jump in and add to the diamonds or add to the SPYs or add not necessarily to the Qs, but more so the SPYs, I should say, you should be sitting there again very, very pleased at this particular time. Now, let me move into some of these individual trades, because what we didn't see with a lot of these market leaders is really participation on the downside, nor do we see participation to the upside during today's session. Now, this doesn't necessarily mean anything, but in context of the individual chart, we are still holding up very, very nicely. And it looks as though this is still a genuine continuational sort of stair-step pattern. Now, if we bring up these exponential moving averages, you can see that we're still holding above more or less all of them, the 10, the 20, and the 50. Volume is still trickling out of Apple. However, when I bring up the weekly chart, you can see for yourself that this is really looking like that of a flag, or as I just mentioned earlier, that of a stair-step pattern. So although Apple is a little sleepy, I think it's going to awake relatively soon, and it's going to be exciting when it chooses to do so. We've got our target set, the trade bracketed. This is just waiting to pop. So again, something exciting there. There is still a lot of strength in the majority of our top 12 list, and I wanted to just recap this as well for you. Amazon, pardon me, still continuing to the upside. This is creeping higher in the face of what has been a weak market on Tuesday and also today. So you can see that we're starting to see some acceleration away from the rising exponential moving averages. If we see again traction form in the market indices, it wouldn't surprise me to see Apple and Amazon wake up and have some pretty tremendous long day Morobozu candlesticks if we can break above that pivot that I've just sort of shown you on my screen. We've got Boeing Airlines a little sleepy, not doing all that much. That's fine. It can choose to do so. We've already sort of evaluated that. Baidu looks as though it's setting up that of a bear flag continuation to the downside, which may ultimately close this gap down here at 230. Not really looking to trade Baidu at the moment. We've spoken about that over the weekend. We've got Caterpillar, surprise, surprise, still holding up at 155. Again, we've spoken about this. The trade is brewing, believe me, but it's just not ready yet. COP. Again, a trade we spoke about over the weekend, stabilizing at the 50, stabilizing at this really nice support area just between $64 and $65 per share. You can see this trigger here, $66.97. Pretty decent move today, $2.34, pardon me. And COP, I mean, just to recap this in retrospect, you can see we've been adding orders, or at least positioning ourselves as far back as the month of March at 55 and 56. We've added at 61, and this has more or less kicked the trend of what has been sort of a correctional type of movement in the overall market indices. Well, finally, gravity caught up to COP. It went through that of a retracement last week, a very quick retracement, but again, this is trending and it's holding at the 50. Decent volume today as well. This is looking fantastic for another continuation above 66.97 as it's doing right now. It's closed and overshot the gap, and it's a good chance that we are going to come back up to $70 per share. It just depends on what the market indices do as well. Now, when we look at COP and CVX, they are somewhat similar. However, when it came down to the risk and reward sort of snapshot of these two trades, we had a very clear preference for COP. However, CVX is mimicking more or less what COP did today as well, up $3.77. We overshot the 50 ever so briefly, but you can see that although we haven't closed the gap definitively, we do have that of a Morningstar 3-day reversal pattern as well. So this is looking quite good. However, this is a dashed line. So personally, it's something that I'm staying clear of at this time. But again, CVX is showing us that it wants to continue in its overall bullish trend, which is fantastic. We've got Google more or less moving sideways. I think this is looking like a very short-term wedge, or that of sort of a very short-term descending triangle. Although it's not technically correct to call it like that, it is more or less just holding around this pivot. It's treading water, and I do believe that when we see Apple and Amazon gain traction, Google is going to take us back up to 1131 as well moving forward. Now, let me continue with IBM. IBM's holding the pivot at 140. This may turn out to be ultimately the low that's priced in for IBM before we come on up and close the gap at 158. I'm excited about this. Pay attention to the Bollinger Bands. I'm going to recap this in great detail over the weekend because I think we have a great trade setup moving forward. And as long as we hold above the pivot at 140, IBM is going to base, and it's going to work off from that base to put in higher prices over the coming weeks as well. So I'm excited about the trade. I'm excited about the trade setup on IBM. We've got Netflix, which is still holding up quite well, up $3.81 above the 342 breakout pivot. This kicked, I guess, the trend yesterday during the sell-off. It also didn't move all that much today during how we actually made back a lot of those losses that were made yesterday, so to speak. So Netflix is holding in there. It's just showing strength. And this is somewhat similar to the Russell trade where we've got a defined breakout at 330. Trigger was 342. But there is still the possibility we come on back down and bounce. We don't have to do it. And a good thing to look at, or at least a technical indicator, are these exponential moving averages. And we are still holding above all of the exponential moving averages, which is good to see. Also, if we bring up the ADX and the CCI, look at this. We've got the CCI at 148. Printing certainly above the 100 breakout, and the ADX is elevated as well, telling us that the trend looks to be legitimate. Now, what I've done, I just want to make this very clear to people, is I've changed Tesla from a default line, okay, something that we saw up here at 312, not a default line, but a dashed line, which means that, yeah, you can make the argument for a trade, but we're simply not doing it, into a solid line. Now, what this means is that if Tesla cracks 272 at the moment, over the coming weeks, this is a legitimate trade setup now. And the reason for that is because Tesla's had ample opportunity, especially during Tuesday's session, to break below the lows. It chose not to, which is great. You can see that we're building a support here at about 275, and we're starting to bounce away from this level. Do I think this movement that we're seeing on Tuesday and Wednesday is legitimate and sustainable? No, I don't. You should pay attention to the private bond price anyway of Tesla. It's absolutely crashing at the moment, which is a pretty decent forward-looking indicator for the stock price or for the share price moving forward. And if you pay attention to the larger sort of picture, the backdrop, the macro backdrop of the chart itself, it's very bearish, and it looks as though this is going to be potentially that last kiss of death or the back test of this 300 handle. So we've got about $9 until we tag 300. If you see Tesla roll and then say the markets continue to move bullish, but Tesla begins or at least continues to sell off, so to speak, continue the larger sort of broader selling momentum underway on the chart of Tesla, well then once we crack this 275 handle, now that we have legitimate support and decent support, what you're going to see is a movement from 272 down to 267 to 244. So we've been waiting for this, or at least I've been waiting for this to set up or sort of produce itself like this. And it's great to actually see this. But what I don't want you to get convinced about yet is that Tesla's set to sort of break above 312 and run all the way up to 360. Can it happen? Of course it can. Do I think it's going to happen? No, I don't. So essentially what I'm looking for is Tesla to more or less stop at 300 to then begin to roll over. But I won't be taking positions at 300. I'll be waiting for 272. So if the markets themselves also roll, fair enough. I don't think they're going to. But this is a definite sort of insurance policy, so to speak, that will pay you off if we begin to crack 272. And I just wanted to recap that here and now. Also, if I look outside of this, GLD is looking a-okay. It's up 19 cents today. What's good to see is that during the capitulation or the short-term capitulation yesterday, there was a bid for gold. It actually moved on up and we filled the gap, and we also pushed into what was that of Friday's or Monday's candlestick when you're talking about the 24-hour gold price, which was good to see. We saw decent volume as well. This candlestick, although it's red, it should be green. And today, when the market recapped more or less the majority of those losses that were made on Tuesday, it didn't sell off. It actually produced another white candlestick, which is showing us a little bit of strength coming into gold. This trade setup is quite good. It's dating back to 2016, where this trend, or what appears to be that of a bullish trend, is still in the works. It's still holding up. It's still structurally a-okay. You can see for yourself that we're still pricing in a series of higher lows. Also, when I bring up the oscillators on the daily time frame, you can see for yourself that, look, these oscillators are flicking to the upside, which is good to see. It's telling us that momentum, especially on the MACD, is changing. But also when I go out of fractal, this is now the weekly chart, you can see just how close we are to oversold conditions. And generally when we get to these oversold conditions, as we push on back down into this bullish trend line mixed with this horizontal area of support, this is on a weekly chart. There's a red line here at 122, which is very important. You can see we're just above it now, 123.38. You generally see multi-week, if not multi-month runs to the upside. So I'm excited just quietly, even though it's not all that quiet. It is very public about GLD moving forward. And I just wanted to update you on that as well. So outside of that, if you have any questions, please email me, success@pivotpoint-trading.com. Other than that, I'm going to say, look, enjoy your Wednesday evening, everyone, right around the world. And above all else right now, I'm very happy about the way in which these markets are moving. We've forecasted it. We've hit the nail on the head. And you should find confidence in this market drifting higher now that we've seen what appears to be that of a successful backtest at 24,250. All right. So on that note, I'm going to say farewell to everyone. It's James signing off on behalf of Pivot Point Trading. Enjoy your Wednesday evening. All the best. Farewell.